Hello and welcome to the Barbarian Investor Show. I'm Adam Jason and I'm delighted to be joined today by Eddy Travia, CEO of Coinsilium. Welcome, Eddy.
Thank you, Adam.
So, Eddy, we're talking about a hot topic at the moment of Bitcoin and blockchain. It's on everyone's lips. Can you just give us a very kind of high-level background on where this technology originated from?
Sure. It all started with Bitcoin in 2009, which is a peer-to-peer decentralized e-cash, electronic cash, and form of payment. But before that, many have attempted to create what we call a digital cash. The main problem was double spending, the fact that you could replicate any digital item, thousands, millions of times. And Bitcoin solved this with the blockchain. So the blockchain is basically a data structure which enables the creation of a shared distributed ledger. So a ledger on which transactions are posted. These transactions are grouped into blocks, and these blocks form this database, which we also call a distributed ledger.
Okay, so it's an open ledger and it's not controlled by any central party.
Correct.
It achieves consensus through computing power, right? So
Yes.
there are people all over the world contributing their computing power to verify these transactions. So when people talk about kind of blockchain technology versus Bitcoin, is that a distinction that's correct, or is there some kind of incorrectness there?
No, so Bitcoin needed blockchain, but you can do a lot of things with blockchain because it's an open source code, so people can replicate the blockchain, a new blockchain, of course, or they can even fork an existing blockchain and can try to add new features and new capabilities to the new blockchain. But basically, you can use blockchain as a technology, and you can still have Bitcoin running on blockchain. So in that sense, it's separate. And most blockchains will have a form of currency on it, a native currency, and some of them now have what we call tokens.
So okay, so it might not be Bitcoin; it could be another coin.
Yes.
And that leads me into the next question, which is that it seems to have transformed from this kind of purely e-cash system into more of a kind of wide-scale economy and targeting various different industries. So how has that kind of change occurred, and what's been the underlying cause of that, do you think?
So the important milestone is when smart contracts have been brought into the blockchain. So there was no complex programmability available on the Bitcoin blockchain, but that was on purpose, on design, because the idea is to make an efficient and secure, very secure, because the Bitcoin blockchain has never been hacked, a very secure network on which you can transfer value. But Ethereum was, for example, an example of one of the first blockchains that brought smart contracts or programmability, which enables business logic to be put into the blockchain. And these smart contracts are basically input-output type of processes and code that is run on the blockchain. And they enable, for example, the tokenization of assets, or basically the issuance of new tokens. And this has had a major impact over the last couple of years, with more than $8 billion raised in funding through the issuance of token, or to what we call token generation events.
Yeah, and this has drawn a lot of attention from regulators around the world. So what's your opinion on the kind of regulatory stance at the moment, and what kind of impact it might have on the growth of the industry as a whole?
So since the beginning of Bitcoin, regulation was a concern, because Bitcoin itself, both being a currency and sometimes some entities have looked at it as a commodity, or different regulatory type of labels have been put on Bitcoin and blockchain. But when it comes to tokens, then the most prominent one would be a security, because in some ways, although it's meant to have a utility, and that's what we call utility tokens, access to a platform, many tokens may resemble a security. And if they do, some organizations like the SEC are looking at it, right? There are different approaches. One approach that we work with and we like is the approach of a jurisdiction like Gibraltar, which has been looking at this for the last couple of years. And they have come up with a more progressive and principle-based type of regulation framework. And I think there are different approaches all over the world, some very restrictive, where it's either impossible to do or with a lot of legal and compliance restrictions, which are quite expensive to put in place. And I think we have to strike a right balance between punitive and progressive regulation.
Okay, and Coinsilium has been in the industry for a long time now, a number of years. So can you tell us about some of the projects that Coinsilium's involved with and some of the work that you're doing?
So I started back before Coinsilium as investing in the space to promote the whole startup ecosystem, initially the Bitcoin startup ecosystem, but now of course it's much wider than that. So we have created a company in 2014 called Coinsilium. We got our shares traded on the Next Exchange, a publicly recognized stock exchange in London in December 2015. We have invested in 18 blockchain companies in equity. Some of them are Factum. We were the first investor in a company called RSK. And basically now our role from just investor has moved to venture builder and now to advisor. We've been advising 15 token generation events, which collectively have raised about $500 million. And that is part of our daily work now, is building up a team to help these companies go through the token generation event process.
Fantastic, sounds great. Thank you very much for your time, Eddy.
Thank you, Adam.